Using Gears. I'm here with Bess Dixon, local real estate expert in Dallas, Texas, and I'm Mark Leisner. I'm your lending partner here in the Dallas Metroplex and in Texas in general. So today we're going to talk about the home buying process in 2025. So
there you go.
What do we have to add
new
to
goals.
this? Exactly. So the home buying process, you really start with usually talking to a realtor.
Fair enough.
You know, and that's a process of understanding your goals. What are you looking for? What neighborhoods? What's important to you? That's the real estate side. So on the lending side, we're talking about doing a pre-approval. So that's basically an online application you fill out. You supply me with your pay stubs and your credit report along with your bank statements, and I can pre-approve you. That's as simple as it gets.
Wait, I must intervene here.
Yes.
Mr. Gears to our money.
Yes.
What if someone says, which they often do at an open house where we meet, but I'm pre-qualified?
Yes. Pre-qualified.
Is that the same thing as pre-approval?
No. So there's different levels. Pre-qualified, that's a good point. I keep forgetting because I don't do those.
You don't do pre-qualified.
Pre-qualified.
So people are either thumbs up or thumbs down with you.
Exactly. They know with me, I want them to have certainty that they can purchase a home.
Very sexy word in real estate, certainty.
They want to know that they can actually do this from day one. Mm-hmm. And there's no obstacles, right? So I essentially underwrite the loan in the front end, even before they get into your car to look at houses. You have certainty that these customers can actually buy a house.
Very nice.
Because I want them to focus on the home purchase process and not the financing process.
So if they're shopping around for lenders, like people often do, consumers do.
Especially online lenders will do what's called a pre-qualification, where you just tell them this is how much money I make, this is my credit score, or they.
So it's like a handshake agreement.
It's a verbal qualification, okay, and it doesn't. The lender didn't do their due diligence in terms of actually verifying in writing the three things that make up a mortgage: your credit, your income, and your assets.
So those nuts and bolts.
Those three things need to be
are missing from a pre-qualified
in writing.
Letter.
Right.
But they
pre-qualified,
are in play with a pre-approval.
Pre-approval, they're actually, I laid eyes on them. Okay, so that makes it a pre-approval versus a pre-qualification. The other thing that some of the lenders will do, they will do a soft pull on your credit. A soft pull on your credit really doesn't do anything. It doesn't really tell the lender very much. It just tells them what your score is, and that's pretty much it. I'm not a fan of that. I think if you're serious about purchasing a home, you need to do a hard pull, because things will come to light in the credit report. I've had it too many times. Prime example, last year had a customer, self-employed customer, both driving very, very, very expensive cars, multi-million-dollar businesses, both of them, husband and wife. They kept saying to me, our credit's great, don't worry about it, just get us pre-qualified, we're fine. Made an offer on a $2.5 million house. At that point, we needed to pull their credit in order to place the loan with the lender. And I kept saying to them, I've got to pull your credit. I don't feel comfortable with this. Come to find out, credit scores, low 600s. There's all kinds of issues on the credit, which are going to take 6 to 8 months to clean up. And the realtor had wasted their time showing them houses for months. They wasted their own time, which is obviously valuable running $1 million plus businesses, all because they just didn't want to do the effort of, hey, let's pay for a credit report and have certainty.
So if they had trusted you instead of Google or whatever else they decided to do the research on.
Their own thought of what their credit score was.
And the crazy thing is, all those months that they spent looking, they could have been busy repairing that credit.
They would have been ready. Yes, they would have been ready.
They would have been ready.
Yeah. So it doesn't help you to save money on not pulling your credit, the real credit report.
And you say that because to pull a hard credit report is about $70.
It's actually, and this is a great segue. Thank you for bringing that up. The credit report companies that what they charge is not based on what they want to make. It's based on what the 3 credit bureaus are charging them.
Got it.
So the credit reports are now up to almost $100.
Oh, no kidding.
Yes.
Okay.
So
but to protect or to put you in play for a $2 million house, $100 seems like a
even if you're buying
piece.
a $300,000 house, having the certainty of knowing my credit is great, or hey, let's make a plan to get you there.
But Mark, when you pull credit on me, my credit rating's going to drop. Now what?
Yes, usually drops about 10 points, and it'll come back up in 2-3 months after the pull. So it's a 10-point drop that you suffer, but you have certainty. So you do it at your own peril. If you want to leave that to the very end, I don't recommend it. Have seen it gone sideways too many times, more times than it worked out. Actually, because the very same people that have a problem with this usually are the people that have a problem on their credit. It's very interesting how that works.
Yeah. In the poker game of real estate.
And so as a home buyer, you don't want to get excited about a house and then have a relatively, something you could have stopped, you could have prevented from happening, happens to you, and you can't buy this house that you've emotionally invested into now. As you know, once they find that house, they love the house, right? That's why they made an offer on it.
But that's also on the real estate side, on the actual process
right.
of being successful, no matter what the market is. A good listing agent will not accept an offer
that's pre-qualified
unless
correct.
It is pre-approved, and that it's currently dated pre-approved, not
right.
a pre-approved from 6 months
right.
ago, because as you've just alluded to, your
right.
credit can change quite a bit in 6 months.
Correct.
So pre-qualified is worthless, really, in the purchase process,
yes,
and pre-approval currently dated is the biggest key.
As any real estate professional, I don't care which side you're working on, I would not work with a buyer that isn't pre-approved. Just wouldn't do it as a policy, because you run your own business and you're in charge of your time, right? So as a professional, I would not accept home buyers that are pre-qualified. Just wouldn't do it. Just say call me back when you're serious.
Well said.
So it's like saying we're going to skip the inspection, right? We want to save ourselves $600, $700 for an inspection. No. If you're that penny pinching, you're probably not cut out for owning a house.
Yeah.
Let's be real.
We should talk about that.
So the home buying process, filling out an application online takes 15 minutes. Ordering your credit takes 2 minutes. Me doing my work on the back end, getting back to you, going through all the options that are out there. I work with 100 different banks that I can place you with, depending on where you want to be.
Which I do love. That's one of your superpowers.
Yes.
Besides your depth of financial notice.
I don't just have one product.
From all sides.
Yeah. I don't work at a bank that has one product with one rate. I work at 100 banks that have 100 different products, 100 different rates.
So you're solution focused, and that enables you to be client focused.
Correct.
Not meeting a mandated goal,
sales quota or right,
quota. Thank you for that big word. I don't know why it escaped the building.
And at those companies, at those banks, those loan officers, that's what they worry about, is meeting their quotas that are given to them by their higher ups. Right? They're in sales. I'm not. I'm in advising business, and I work for myself. I don't work for any of those banks, and so therefore I don't have a quota. I just want to do what's best for your client. I want to find a solution, and I can count on one hand in 6 years how many people I could not get to buy a house. So there is a solution for almost anybody out there. So
if you've done your homework ahead of time,
right.
and that is make your savings account as fat as possible.
Right.
Family budget that you're sticking to.
Keep your credit clean. Pay your bills on time is the biggest part of it. What I see is not paying your bill. The other one is credit utilization, in terms of credit cards and things like that. How maxed out are you?
Mm-hmm. Or underutilized.
Correct.
Correct. That was one that
unused
we both
credit.
were working on.
Yes.
They had credit cards that they'd never used.
Or somebody that pays cash for everything doesn't even have a credit card, right? So it behooves you as a customer who wants to buy a house at some point to come talk to us first and say, hey, how do we go about doing it? Here's my situation. Yeah. What should we do?
So essentially, that's the first gear of buying real estate.
And a lot of times people do it backwards. They leave the financing to the very end, right?
Yes.
When they should do it in the very beginning, because financial planning wise, there's a lot of things to discuss too. How is this going to fit into your financial plan?
The house you buy, the size of the house.
Owning a house, how's that going to fit in? How long do you want to own a house? What are your future plans? There's a lot of questions before we even get to the actual financing nuts and bolts gears of that. There's a lot of things to ask before that.
So lots of behind the scenes gears before you even get to keys. I feel like, what do y'all think? Should be part 1. I think we're going to have to do a part 2 and possibly a part 3 on the buying process.
Yes.
And so we'll
questions
wrap up this.
To ask yourself. Yeah.
There we go. So we'll do the finance. So ta-da, finance was part 1.
Yes.
Just made a statement. There you go. Okay. Let's get to kind of a goofy part of our.
No, I love this section because it's so interesting, the things you see in real estate, the crazy things.
That's what the heck. So this is what Best saw this week.
Looks like a bathroom. Looks like a shower.
Like a bathroom. And terrible picture, y'all. But what I'm trying to show is obviously it's a subway tile that the homeowner had decided to change up and elevate by, instead of laying it with a alternating grout, like a brick grout, decided to do it vertically. And I don't know if you can tell, but you maybe right about there you can. But none of the lines are straight. The whole thing actually, you can see it across the top. The tile doesn't quite reach. And you can see how the gap is a little bit different. Look at that corner, and the gap is pretty bad.
Oh my gosh, yes.
The whole thing. All right, so the tile contractor showed up. He had forgotten his tile saw, and he did not bring spacers. So he had asked the homeowner, the spacing between the tiles, which is part of the design process.
Yeah.
Maybe that's an episode. 1/16, half-inch, quarter-inch, like how much space between the tiles, and she had said 1/16. And anyway, he came without spacers, and he did not want to spend the money to go get them. I don't know all the reasonings behind it.
Oh my gosh.
She called me in tears, and so this is what I found when I got there.
Oh my gosh.
He used cardboard. Pieces of cardboard.
In the world?
He took apart the tile boxes that the tile came in.
What in the world?
And used that as spacers. Well, the challenge, hats off for creativity. The challenge is, I don't know what your experience has been, but when I have paper products get wet, they're kind of, they wilt.
That's not.
And so you end up with crooked everything. So what was the solution? It's actually in process. We had to rip the whole thing down. So her inexpensive, cheap tile guy that she found.
So what lessons lessons can we draw from this, Bess? If you have a project like this, call a real estate professional who has good contractors to refer to you.
Fair enough.
Right?
Yeah.
I mean, that's one lesson. Yeah. One lesson. Don't cut corners. Ask questions. That's crazy. Cardboard?
Yeah, for spacers.
Oh my God.
There you go.
It's
our surprise. Can you believe it this week?
The thing, you can't make this up, right?
I know.
Crazy.
It is great. It is great. We're so glad you joined us again as we shared with you the keys and gears to real estate from our wild and crazy perspective.
Yes. We're going to show you the background behind, all the craziness and what to do and what not to do. That's kind of the point of the whole podcast, is to give you information you're not getting elsewhere. This is not HGTV, right?
Information you're not going to get elsewhere.
Right.
There you go. Especially
usable information.
Yeah, our heads are crazy, scary places to be. We're in them all the time, and we're happy to share them with you. So like and subscribe, and we'll talk to you next time.